wealthbranch.com.
5 dividend terms you should know before you jump into dividend stock investing. Here are a few dividend terms you should know. Trailing dividend yield. The trailing dividend yield is also known as the TTM, trailing 12-month dividend. It is the dividend yield for the last 12 months. Forward dividend yield. The forward dividend yield is the projected dividend for the next 12 months. It is calculated by taking the most recent dividend amount and multiplying it by the dividend payment frequency. For example, airplane manufacturer Boeing's stock is currently trading at $339 with a trailing dividend yield of 2.23% and a forward dividend yield of 2.42%. Boeing increased its dividend 3 quarters ago from $1.71 to $2.55 per share, causing the dividend yields to be different. The trailing dividend is calculated as $2.55 times 3 plus $1.71 equals $7.18 divided by $339 equals 2.11%. The forward dividend is calculated as $2.55 times 4 equals $8.22 divided by $339 equals 2.42%. Dividend growth rate. Dividend growth rate is the growth rate of the company's dividend. The dividend growth rate is essential for the dividend discount model, DDM model. Also, it is crucial for comparing companies and extrapolating future dividends. Yield on cost. The yield on cost is the dividend yield based on what you paid for the stock, usually displayed in 5 or 10-year frames. For example, currently, Wealth Branch's stock price is $15, and the dividend amount is $1 per share, producing a dividend yield of 6.7%. However, let's say you bought the stock 5 years ago for $10, and the stock paid 55 cents per share in a dividend. Because you bought the stock 5 years ago at $10 and the dividend grew from 55 cents to $1 per share, your 5-year yield on cost is 10%, $1 divided by $10. This means you are currently getting a 10% dividend on the money you invested 5 years ago. Compound annual growth rate, CAGR. The compound annual growth rate, CAGR, is also known as the geometric average growth rate. Using the CAGR, you could find the annual average growth rate with a beginning and end value. The geometric average growth rate includes compounding, whereas the arithmetic average growth rate would not. The formula is CAGR equals ending value divided by beginning value in conjunction with 1 divided by number of years minus 1.
wealthbranch.com. Thanks for visiting. Watching.